Good morning, good morning. What a crazy day. Friday, April 19, 2024. Lots of news out there last night, making the market kind of wacko today. I've got UVXY up here, and I think we want to keep an eye on this. Make sure we don't start climbing up. If we do, that's going to put some fear in this market. I know that, you can see we've pre-market here, we're up, and now we're down. But overall, this is a pretty bullish chart. We've got this inverted head and shoulders right in here. We've rallied up, pulled back, rallied for a higher high, higher low. So I really think we need to be careful and watch this. I'd put the VIX up, but I don't get real time on it. And the VIX right there, now let's put this up here. Right there at about, we'll call it 20 bucks close, 1960, 1970. That's the 500 period moving average right there. And if we start popping over that, that's going to be a problem, I think. We can draw a trend line down here, and we break that trend line. That's not what the bulls want for sure. Not at all. If we look at the SPY here, there is nothing about the SPY that's bullish at the moment. It looks like we're coming off those lows. We got down there pretty low, 496 down here. And that's about where that 50% retracement was. I've removed that now. We'll put it back later. So for the market to be bullish at this point, we really need to see a bullish chart pattern put in. We need to see that low, high, higher, low, higher, high, or just kind of run and create that rounded bottom, which that rounded bottom will have this in it. So market-wise, I think we're underwater. There's some charts that, they look pretty good, but by and large, the power is with the bear. The problem we have now is I think we're getting a little too far down there, so we want to be careful not to chase. It makes for a bum day for trading, swing trading anyway. Day trading, scalping might be pretty good, but a lot of caution here, I think. Our T2123 is still leaning toward the bearish side, both 60-minute and 15-minute. This is not real time, so we'll see what it looks like when the market opens up. But price being down, likely this is going to be down as well. So yeah, I'd be a little careful out there. Like I say, there's some bullish charts, but by and large, I think the bears have control. So being Friday, if you guys wouldn't mind picking a few charts and see what you think and see what you're looking at out there. Well, Rickster, thanks, that 50%, but unfortunately, we got there because of events overnight, and I wish it wasn't that, but it is what it is. But you're right, we got down to that 50%, and that may create a little bit of a relief rally. Going into the relief rally, if we get one, if we do, I would look at shorting at this point. I would not necessarily look for buying long. I think the power is still with the bears. There is still a real chance we get down toward, say, 480. Now, I don't think we're just going to go straight down there, but I just don't feel the bull right now. I just don't. And believe me, when I do, I'll let you know, because I want to be a bull. So Netflix, yeah, haven't even looked at them yet. They reported and they're down, so I guess, what is it? They're not going to report some numbers next year or something like that. And evidently the market doesn't like it. So right now Netflix is looking short. I'd be, because they did report well, You know, if they don't report some numbers next year, who cares? I mean, good grief almighty. So that may be a non-event overall. But if we're going to short this, just mind those rules in there. Below yesterday's low, and then stop-wise, I don't know. We start putting in, if we start climbing up too much, halfway of yesterday's candle probably would stop me out, because that would create a bullish piercing candle. We might get a little follow through off something like Netflix. See GFI. GFI looks great. Yeah, let's flag that one. Get rid of that line right there. GFI looks pretty good here. Move it to a 2-day chart. You can really see. This is one that I was kind of looking at, I think, last night. You know, some of the gold. Weekly chart is up. We can come over here, and that would be the new floor right in there. So something like that. You just want to, I think the main thing is probably over 1830 is what I would look at myself anyway. Over here on the scanner, I can see Meta is trying to come back up. Meta's coming back up. Microsoft, but I think Microsoft's way underwater. Yeah, Microsoft is trying. So right now, anything up, I would actually be looking for a short on that one. DKS. Probably, you know, I think we need more information here. Tell you the truth. Right now, I just see a pullback in a bullish trend. So if we crack that 50 period moving average, that would be different. But right where it is now, kind of suspicious to me. Probably not the chart I would want to trade in right now. Let's see, I've got a few flagged here. Let's take a look at Shack. Shack is still short. I think we're failing right in there. There looks like there's plenty of room to drop down here, 15, 17%. United. I think United is very bullish in here. I really would like to see more of a pullback. I hate to buy up this high after this kind of a move, but United is one that I would be stalking, and I'll be stalking that one. Costco is still short. Look at Costco. Plenty of room for it to move down. I just don't, I look at Costco, I just don't see any reason to be short or long in this. Somebody, we could argue double bottom here, but the trend is what counts. When you start looking at double bottoms, that's sort of third, fourth, fifth on the list. Trend is number one. Price is number two. And everything else is a far distance under those two things right there. And you can't argue with the trend. Price can dance around a lot, kind of trick you, but it's that overall trend that really keeps you in line. Wells Fargo. Oh my goodness. I mean, what a beautiful chart in Wells Fargo. But I wonder, you look at Wells Fargo and it's moving up, and, Bank of America is not doing that great. JP Morgan not doing that great. Morgan Stanley not doing that great. XLF not doing that great. So I wonder what's going on here. Makes me leery a little bit. And then, the market's not in your favor. So, but what a beautiful chart. Let's see, what else do I have in here? KW. KW might be setting up, trying to put a bottom in here. Might be. Short-wise, let's see what's coming up. RELX. That's setting up more for a short. If we run up, we'll watch for that short on that. So many charts are beat down right now. So many. So let's take a look at the diamonds here. Diamonds are trying to put this little hammer in pre-market. The question is, will it go anywhere? And that's what we need to wait for. So if this is going to actually produce something today, what we need to see is that high. And not all in one day. We need to see it pull back, and we need to see that breakout of wherever that high is. Right now, just looking at the chart, over 383 here. That's what I would have to see. And that's just based on the chart we have right now. Then we might have, a run toward that 50-period moving average. Qs, we're right down that 50% retracement. We could start to bounce up, but I would look at anything, any kind of relief rally toward up here, toward this 430 as a shorting opportunity, not necessarily a long opportunity. Now, all that could change, but right now, I just don't see where the bulls have a big advantage there. So, outside of that, I don't have too much here this morning. Transports are right down here to the dotted deuce, SMH. That's pulling back a little bit. Inverse ETFs. For those that have trouble shorting, don't short or whatever, the inverse ETFs is a fantastic tool. You only need 3 or 4 of them, if that. SDS, real simple, real easy. You can get into the doubles or the triples, where if the SPY moves or S&P moves a buck, these will move 2 times or 3 times, but this is just standard. So these inverse ETFs are, man, I remember when somebody turned me on to these years ago, I just thought I was in heaven, because back then I never shorted. Everything was long. So these were just a fantastic tool here. SQQQQ, too many Qs. The problem here is I think we're a little bit overbought. We need a pullback in here. But these are fantastic tools to trade. And like I said, you only need just 2 or 3 of them. And whenever I trade these, I mean, there's inverse ETFs for a lot of things out there. Just go after the market in general, like the diamonds or the Qs or the SPY. Keep it simple. Keep it simple. Because by and large, the shorting process is much shorter than the bullish process. So what I mean by that is typically, all right, typically, you will have a longer bullish move than you will a bearish move, typically. Now, here in the past, we've had a lot of bearishness. I don't think we're ready for that sort of thing yet. So, I mean, overall, I still think we move up higher. We just need to find the buyers where the buyers think the market's worth it. So you're going to get a longer move in the bullish side than you will the bearish side. That's what I think overall. So anyway, that's about all I have. We'll see everybody here in about 30 minutes, bottom of the hour. Thank you for being here. And again, happy Friday to everybody. Be safe today. Trade wise. We'll see you in 30.